Welcome back to the channel. I'm Foreman, and in this video I'm going to be talking about ASOS, a stock in particular that I'm going to remain as unbiased as possible whilst wearing pretty much all of my clothing which is from Boohoo. I hope to do this video not because I was suggested it, which you can do if you'd like to see a link in the description, but rather I wanted to analyse the kind of competition in the fashion industry and see how Boohoo sort of ranks up. After all, this stock is down 48.2% in the last year as well, so I am particularly interested in their potential value. If you didn't already know, ASOS is an online fashion retailer, and effectively they sell their own brands as well as other retailing brands. Typically, a majority of their revenue is made through selling other brands. However, they aim to increase their own brand's revenue or revenue stream or share of their overall revenue to 25%. That's their goal, and then they would like to increase that sustainably over the longer time. I think that, or longer term, I think that'd be a good form of diversification. In terms of valuation, ASOS is seen as very cheap. Their price to earnings ratio is less than that of the market, but their price to book ratio is also less than the industry. However, their price to sales ratio is what really fascinates me. They're trading at 0.6 times their revenue, which means they have a smaller market cap than their revenue. Their market capitalization is £2.3 billion, and their revenue is £3.9 billion. Yes, their earnings aren't that high for their overall revenue, but it's still £128 million of earnings, and that's considering the shipping costs, freighting, and the logistics that are currently a concern in the industry, or just pretty much the retail industry in general. You may have seen that a lot of online retailers have certainly seen quite a pullback as of late, especially the smaller ones. However, you might argue, what about Amazon? Well, Amazon the last year is only up around 8%, and they actually made a loss on their retail marketplace, I think purposefully, but managed to make a profit due to their web services. Anyway, I digress. ASOS honestly has a pretty phenomenal track record of past performance. At least since 2015, they've quadrupled their revenue, now sitting at £3.9 billion. Yes, their earnings are very low in terms of their profit margins. You're looking at around 1 to 4%, and at the moment it's around about 3.3%. And yes, their cash flow is starting to look a little bit more negative. But this is a company that have longer term goals to reach an EBIT, earnings before interest and taxes, of 8%. They hope to sell more of their own brands and therefore make a larger portion of revenue. In stark contrast to Boohoo, who are completely vertically integrated, meaning that Boohoo themselves have a higher profit margin because they develop every single part of the supply chain. So they are creating the products themselves and then retailing it themselves. Whereas ASOS only do a small portion of that, but you can see that perhaps as they grow that segment, their profit margins will start to creep up. ASOS has a pretty good but not amazing balance sheet. Yes, they do have a relative low amount of debt to equity ratio of 44.8%. However, I would love it to be lower, and it has spiked up as of recently. At least in 2021 or even the end of 2020, their balance sheet looked pretty amazing. High equity, no debt. But now they have certainly raised debt, and I imagine this might be partially due to their acquisition of perhaps some of Arcadia's brands like Topshop. Topshop is an interesting one, and at first I opposed the idea. I felt that they paid a lot for the brand, but when you really break it down, you see what the brand has. They probably have a lot of stock. They had obviously that original real estate, which they probably didn't purchase, or I've not looked into this bit deep enough. But there is sufficient value involved in it, and that brand awareness is certainly huge. Effectively, ASOS bought market share, but at the same time, I always felt that ASOS sort of targets 18 to 30-year-olds, sort of that region of age, mainly in their 20s, and I feel that buying more brands in that demographic isn't really sustainable long-term growth, but it's certainly going to buy market share in the short term. Whereas in contrast, Boohoo had bought the likes of Debenhams, Dorothy Perkins, Burton, which are perhaps brands that are more outside of Boohoo's core market, specifically like Debenhams, which literally goes more or less the upper end of their target demographic, and I feel that that gives them good diversification, especially the idea that they could move further into the beauty sector using some of Debenhams' old stock, and if that proves successful, then obviously they can move to their other brands. And so ASOS, I think, are in a weaker position so far. But then they do have high amounts of cash, and certainly a lot more than the likes of Boohoo, which is sitting at similar terms in terms of a market cap valuation. But they have £662 million. That's not bad considering, but Boohoo is sitting around about £98 million. But overall, when we look at the net cash, which is your total cash minus the debt, ASOS is looking at around about 200 million pounds of cash, and Boohoo is sitting around 98 million pounds of cash. Obviously, they're not going to pay a dividend, but their management is where things start to get interesting. You may notice here there's a bloke called Nick Baton. I don't know how to pronounce his name. I should have checked. He owns 0.16% of the company. If you weren't already keeping up with ASOS or who this gentleman is, he was formerly the CEO. However, very recently he had stepped down. This is a man that had been working for ASOS as the CEO since 2015 and had really made serious strides to improve their revenue and their overall sales growth. He formally joined in 2009 as a chief financial officer, so he has certainly done a lot of time and work, but I'll be jumping into more of him later. In contrast, the likes of Boohoo, which has roughly 20% of their shares held by insiders, only 3.6% of these shares are held by insiders, which I find particularly interesting, and that is held by Nicholas Robertson, which for the most part holds a majority of that, as he is one of the co-founders and now a non-executive director of the board. ASOS has quite an interesting business model. They want to be a global retailer for those in their 20s. They want to build up their own ASOS brands that have their own unique design that cannot be found anywhere else. They want their own one platform that provides simple access to all of the relevant products all the time. They also want a good experience where it's inspiring, perhaps exciting and friction-free, and that's what they've said. But they also want an effective, efficient and sustainable business model, which I find particularly interesting, seeing as we're having a lot of ESG concerns in the markets, especially with supply chain. So it will be interesting to see how ASOS deals with this, and I believe in the past they did have their own struggles with this as well. Their strategic priorities of being a truly global retailer does interest me. It shows that they've got long-term growth aspirations, and this is something you want to look for. This is not a company that's chasing short-term profits, but rather they are looking for something to dominate in the markets over a longer term period. In particular, when we're looking at their ethics or how they're looking to be sustainable, they're aiming to be net zero, and they're actually trying to be carbon neutral in its direct operations by 2025. They want to be more circular. This means that they're ensuring more or 100% of their own brand products are made by sustainable materials, and they want to be transparent and diverse with what they do and provide. So it definitely seems that since obviously the supply chain issues with Boohoo, that everyone seems to be stepping up their game. This is a retailer that does want to be along or around for the longer term. If you'd like to sign up to my stockbroker free trade, you can get a free share worth up to £200, but more than £10 each time, then use my link in the description down below. But be aware this promotion will not last forever, and that minimum share price of £10 may be until the end of the month. They've seen their active customers rise by 13% in 2021. They're now sitting at 26.4 million active customers. Perhaps on more of a negative view though, they have seen a lot less mobile device visits, now looking at down about 83.2%, but this could be good if they're looking to promote on other platforms. Perhaps that's suggesting that they are becoming a more diversified business, and perhaps target ranges that wouldn't be using mobile devices are now looking to purchase products elsewhere. On the 11th of October, ASOS released their final results for the year ending in the 31st of August. They had shown that their group revenues had increased from 2020 to 2021 by 20%, contributed by their retail sales growing by 19%. Their gross profit had increased by 15%, and interestingly, their adjusted earnings before interest, taxes, depreciation, and amortization, or EBITDA, had increased by 23%. Obviously, their net cash to debt ratio has certainly decreased over that time as they've taken up a lot more debt. But as we've seen, we can see that actually in the UK, they had very exceptional growth, growing by 36%. However, when we move more to the US, they've only grown by 21%, which is still a strong amount, but not as good. In contrast, I believe Boohoo had something around, well, at least in their latest trading update for the quarter, they only had revenue growth of 20%. However, Boohoo, I believe in the reports before that, had very high growth in the UK, but less than the likes of ASOS, but much higher comparative growth in the US. I think we were looking at something at the point where ASOS had grown by high 40% in UK, Boohoo had grown by about high 30s, low 40s, but in the US, Boohoo had grown by around about 50%. So obviously, if you're looking about the future, who are you going to be invested with? If you're more bullish on the UK economy, you think the UK's got a lot of room to grow, more than the likes of America, then perhaps ASOS is a better way to gain that exposure, because obviously the likes of Boohoo are obviously growing a lot more in the US, and if you don't think that's a good thing, or if you think, actually, I think the US has a lot more growth potential, then Boohoo might be a better option for you. The board has been changing. I mentioned this earlier. Nick Baton had stepped down as CEO. The CFO has been taking on the role of Chief Operating Officer, and I would not really want to be doing that. I imagine it's very stressful. However, the Director of Group Finance is now supporting as an interim CFO. They're likely looking to search for a new CEO, as they do have a it's very confusing. Effectively, they've got a new chair who has been replaced before, and it's very much quite a bit of a fluff in the company at the moment. But you might think, well, if the CEO's left, isn't that a bad thing, right? What if he's left for negative reasons? Well, actually, this is not the case. And I think the way I can explain this to you is by the secrets of ASOS's success. This is because they are mission-led, they're guided by values and purpose-driven. They want to become the world's #1 fashion destination for 20-somethings. They always want to be humble, and they always want to be better. They want to improve at all times. And the way they did this is authenticity. They want to speak to every new employee or starter of the company and praise them, well, hire you for your passion and talent. Honestly, I think this might be a bit more... I see the value in this, but the way it's been marketed, I think there's a bit more of a focus on them selling that vision to you rather than how they effectively do it. They're on about creativity and discipline. More interestingly, why did Nick leave ASOS? And that's where things are interesting. Apparently, he played a mental game with himself every year because he believes it was important to stay restless and present. It's an annual contract with himself. Would you rehire yourself? Are you filling up to the job? What do you need to do going forward? And with the chairman that he had been meeting with, the chairman wanted long-term commitment, and he wasn't sure if he could personally deliver that. He's felt that his interests perhaps were elsewhere, and whilst they're with them with the short term, perhaps over the longer term, he wants to venture out elsewhere and do something different. For instance, he had spent 10 years trying to knock the hell out of Topshop and then had the chance to buy it and own it, and now they have. He's almost achieved the goals that he wanted to do, and now he's decided that he was a very busy person, and he's just going to not work at Christmas this time, take it easy, relax. It sounds like retirement to me, that's for sure. And then an interesting investor that I want to bring up is the likes of Nick Sleep and Zakaria. They owned the Nomad Investment Fund. I'd found out initially, or a lot more in detail, when I was reading this book, Richer, Wiser, Happier by William Green, about how the greatest investors win in the markets and life. They have a very interesting investment strategy. I'll leave the book in the description down below, in which they have a very small but high exposure portfolio in which they only hold a very limited amount of stocks. They would look for companies with shared economies of scale, effectively meaning that as they're able to grow in size and become bigger companies, they're able to reduce prices and add further value to the customers. Great examples of this would be Amazon, would be Costco, would be the likes of even Boohoo and ASOS. These are all companies that are trying to actively to achieve this. They are able to raise their overall profit, but also then deliver that value back to the customers. With Costco, you might go, how are they doing this? Well, they have their annual subscription. That is where they make a bulk of their earnings. They use that money to therefore stay profitable, but then what they also do is reduce the price of the goods in their store so that then the customers are willing to keep their subscription and keep shopping in those stores. Amazon in particular, as I mentioned earlier, they've subsidized their retail marketplace with their web services so they can afford to operate at a loss if they have to claw up more growth. And it's these kind of stocks that are particularly interesting because they can grow and they have long-term growth potential because they are in an industry of online retail. Well, not Costco, for instance, but they're in that industry of online retail where there is growth over that time period, and they can continue to do so, and they can continually improve their margins and deliver that value extra to the consumer. Hence why with ASOS, they had some quite fantastic sales, much like Boohoo. They were up to 80% off, and at the moment they've got a few discounts, 30% off, all of this. They're able to continue delivering value, and I don't know the quality of ASOS products. I've not personally bought any, although I feel the style is a lot more fitting to what I would certainly wear. But again, it's mainly streetwear, at least on this page in particular. I think this is important. This is a company that will be growing in the future. It's just a question of, do you think this will be the brand that will be dominating over the longer term? At least with their visions, they want to be authentic, they want to be creative, and they are really trying to push the brand forward. They're looking to minimize their impact on the planet and deliver positive benefits for people. This company is something that is really looking to push forward. But at the same time, I think we've got to be realistic. They do have plans in place where they want to grow or reach a £7 billion annual revenue over the next 3 to 4 years. This marks quite a slower amount of growth because it seems like it's starting to taper off as their size gets larger. They're looking to get at least a 4% earnings before interest, taxes, and that's it, of margin. But actually, I think they had further goals. When they sell more of their own brands, they're looking to increase those margins furthermore. But then again, as I say, they are delivering strong performance. But is the money best invested in ASOS, or is it best invested elsewhere? How do we know that they can continue growing, especially with the industry's struggles, which at the moment are certainly a concern? But then, I've just said it, their industry struggles. Shipping costs are high, freighting is high, after all, cotton prices are going up. So yes, this brand is going to be struggling, but so is Boohoo. So is Next, so is JD Sports. So these are all companies, although admittedly the last two have high street stores, that are going to be struggling for a bit in the medium term. But after that, if you have long-term visions of growth, I think this could be a strong stock. One that I'm interested in owning myself, but only don't because I already own shares of Boohoo. I think the quality of the management seems to be of a better notch with ASOS. Boohoo have had their governance concerns, and you've got those, it's become very, very sales. They've kind of lost the vision. They're not focusing as much on delivering value to the customers, and that could be a form of red flag or a concern. After all, they had all these issues in the last year, and the cockroaches could be more of them, as Warren Buffett would say. If you see one cockroach, there could be a lot more to come. Whereas ASOS seems to have a much cleaner slate, I mean, going back a few years only, and that way they do have potential to be perhaps a more ethical choice for investing in the fashion industry. If you like this video and you'd like to see my Boohoo stock analysis, click the card at the top right of the video. Thank you for watching. I'm Foreman. Have a fantastic day.